So, hello everyone. I am Michael Godin, and I'm here with my partner Jason Chalice, and we are thanking you for your time and interest to listen to our presentation on our upcoming project called 3500 Loop Road to McDonough, and Jason and I call this project McDonough Point.
Thank
Jason.
you, everybody, for joining us. We look forward to answering your questions. Happy to do it mid-presentation. We also have a Q&A session at the end. While we're presenting, we ask you keep it on mute just to minimize any kind of background noise, interference. But if you do have something to add or to ask, please unmute yourself and jump on in. But we're very excited about this acquisition. We have been working on it for quite some time. It's been a difficult seller. We do finally have control of the building, and we're hoping to close end of July. That being said, let's jump into it. We see this as a great value add repositioning opportunity. In fact, this is the lowest basis building that Michael and I have acquired in our 2-year history of working together. It will be our 7th acquisition, and at a basis of $55 per square foot, about 15% less than our first acquisition about a year and a half ago. This building is in the growing Atlanta submarket of McDonough. It's about 30 minutes or 30 miles southeast of downtown Atlanta, about 20 minutes from the airport. It's located in Henry County, one of the state's fastest growing counties. And this property is right near the busy interstate. It's about a mile away from I-75, so it's got convenient access throughout Atlanta to the airport and even to Savannah. It's the closest suburb at about 3 hours away. There's a lot of dynamics we like about the market. We're going to jump into that later tonight, but vacancy rates are sub 5%, and we really like the trends that we're seeing. Population of Henry County has doubled since 2000, and not much space has been built in this area. There's just simply not enough space for everything going on in this area. What we like about this building, it is relatively new in vintage. It's about 15 years old. The roof is in good condition. The HVAC is in good condition. We'll be able to reuse that as we lease up. And our plan on this building is going to be similar to other projects of taking a large single tenant facility. This one used to be a call center for TSIS, converting it into 8 small to mid-sized suites between about 5 and 12,000 square feet. And we'll dive in later to the variety of uses that we would be allowed to have at this project. Michael, anything else to add at this point?
Do you want to cover what the little history about the building? This building was built 15 years ago as a call center. So it is currently 100% vacant. The call center that was occupying this big box industrial building that is 100% air conditioned left or went remote, and people have been doing call center now from home. So the building is in a empty stage, and Jason and I were lucky because this building was marketed as a call center building, and nobody from our competition was looking at it to do what we do, which is industrial, adaptive reuse back kind of to the roots of this building. So we were pretty lucky to be able to get in there under the radar without having to compete with a lot of our competitors and get this building under control, under contract for a very low basis.
Very well said, Michael. To add on to that, we've got a 6.29 per thousand parking ratio. As Michael said, this was a call center. They had over 500 employees in this building. We've got a lot of parking, which is a very exciting thing to have. So let's jump into a little bit about the investment overview. Michael, do you want to take it?
Yeah. So we are looking to structure this deal very similar to our previous 7 deals. We're raising about $2.3 million. We are looking to um, call for the funds in about 30 days. So in the beginning of July, and we're looking to close on this building by the end of July, about 45 days from now. Again, we're looking for investors at minimum $25,000, and we are targeting at least a 15% annualized return, or a 1.5 times equity multiple on this project. So this is also targeted to be a 3-year hold project where we would renovate the building after acquisition. So starting August till approximately March, when we would renovate the building. Starting in March, we would hope, starting in probably February or so of next year, we would hope to have our first tenant, and we will hope to fill the building up during 2023, so next year, and then market the building for sale in the following year, making it just under or up to a 3-year hold for this project. We are looking to, we're going to have the same type of return structure, a promote structure, where we, as Jason and I, or Denali, will be compensated. The better the project performs, the more we will be able to be compensated for. So we're trying to create a win-win with our investors. And we are putting leverage on this project, where we are finalizing currently a loan with our preferred bank lender to provide us approximately 65% of loan for this project. So the total capitalization, and Jason, if you can flip to the next slide, will be almost $6 million, where we are looking to put we're looking to put anywhere around $4 million in debt and about $2 million in equity. These numbers are subject to change. They might shift a little bit back and forth because we have multiple banks that we're currently reviewing, and we are finalizing our construction budget. But the general idea is 2 million in equity and 4 million in debt, with the breakdown that you can see here. On the big part of that will be a $2 million investment into, on top of the purchase price, as we call TILC, which stands for Tenant Improvement and Leasing Commissions LC. So we have earmarked a huge amount of capital to make substantial improvements to the building, and these are not so much improvements to the roof or AC, which are in good condition, but the interior modifications to attract tenants that are currently not interested, because this is just a white, big call center box with 700 desks and 700 chairs. We will throw all these out or donate them for tax write-off, and then we will be slicing the building into 8 suites, where we will be attracting individual tenants, and then that is obviously the biggest expense. You could see on the top left, our architect and has created now preliminary plans. They are you could see 8 slices that are the individual suites, and that's where the $2 million will go into. And that is a firewall to separate this individual suite, and that is new front doors for passage, and also new industrial doors, which will probably going to be dealer doors or bay doors or roll-up doors for the loading and unloading of these warehouse spaces. And obviously, there's going to be a lot of expense coming in with electrical and AC and fire panels, and some replacement of the flooring. All the flooring right now is carpet that will need to be ripped out and either be scraped to be polished concrete, or put some luxury vinyl tile on the smaller office sections. The general idea is to create 90% warehouse or showroom, because this is a unique building. It is 100% air conditioned. So Jason and I usually use warehouse as non-air conditioned. Here, we are in a fortunate situation that we can provide 100% air conditioned warehouse, which we expect will attract not just the plumbers and tire and e-commerce tenants, but also showroom and kind of creative use tenants that might need air conditioned space, because we have the parking. And we will be trying to stay within the aesthetics of the building. So we earmarked a little bit more money for more high-end doors. We have a lot of glass facades, so just the rough industrial-looking roll-up doors will be functional, but not very pretty. So we have been looking into, as you can see here, dealer doors on the bottom left that will be sliding, or French tile door opening. We have to do a lot more plumbing for bathrooms, because we're subdividing essentially a one-tenant building into 8 slices, 8 buildings. That means 8 bathrooms, 8 break rooms. That will be a big chunk of the expense of our $2 million reserve that we will be using for that. And of course, we will need to readjust the lighting, since we are going to be putting drop ceilings on the small 10% office section up front, and then we will use different type of lighting, LED lighting, on the open warehouse.
And if you look here, this is an example of a finished flex warehouse space that Michael and I completed at 5700 Highlands in Smyrna. Once this space was completed, within about 4 weeks, we had a lease with a major corporate tenant that uses this for the storage of concert and convention lighting and audio equipment. But this is actually a former lab space, so converting the space in McDonough to this is something that we have done successfully in the past. A couple of the other changes that we want to make to this building to really make it welcoming, give it some character. We want to add a large monument sign to the front of the building. This gives us an opportunity to attract tenants that do want to have street-facing signage to help customers find it, and also for advertising. We also see opportunities in adding building identity through painting the exterior, simple things like adding gooseneck lights or painting the sides of the building with the tenant name will be very attractive in bringing in tenants in the market. So Henry County, south of Atlanta, is one of Atlanta's fastest growing counties. It is the home of Atlanta Motor Speedway. They have several races a year, bring several million people to the area, one of the largest racetracks in the country. Many corporations have opened up distribution or manufacturing facilities in Henry County. The reasons are fairly obvious as we do our research. It is located within 30 minutes of Atlanta for ease of getting goods to this market. It is very close to the Savannah port, which is the second largest port in the country. It is 3 hours away. So if you're getting goods in from Europe, South America, it's very easy to get them inland into Henry County. And there's a great growing affordable workforce. Housing is very affordable in Henry County. You can get a lot for a little bit of money. And this has been an attractive growing market. In fact, over the last 22 years, the population of Henry County has grown 100%. But overall, we like what is going on in Henry County. It continues to grow. They're very pro-business, and they continue to get investments in major products or major projects from some of America's largest corporations. One of the draws of this part of McDonough off 75 is South Pointe. It is the largest retail, really mixed-use destination southeast of Atlanta. It's the largest shopping area for about a 20-mile radius. They've been at 100% occupancy for several years, and you can tell here some of the largest chains in the country: Academy Sporting Goods, Dave and Buster's, Macy's. There's a Tesla supercharger. BJ's Wholesale, which is a competitor to Costco, is coming in, and about a dozen smaller national chain restaurants. Total, if you include the 600 new apartments that are coming in, there's over 1 million square feet of space, and it really is the premier destination for a large population southeast of Atlanta. Financial assumptions, Michael, you want to take it?
Yes. So we are would like to think, conservative estimates to come up with our numbers. I will point out maybe one item here is the exit assumption. You can see that our exit assumptions, we're using cap rates, which is a common feature to sell and evaluate real estate. So we're using a very, very conservative cap rate of 10 here for this particular project, and $108 per square foot price. I think we can beat that. Jason and I live by the principle of under promise and overperform. We like to keep the numbers conservative so that we can beat them. And if you guys are a little bit familiar with cap rates in Atlanta, you probably have seen them to be significantly lower, especially in the industrial or even flex industrial or even office, just pure office. So we hope to have a lot of positive news to share as we're going to be leasing up this building, and we hope to achieve much higher rents. Here you can see rents of $10.25. I think that's also on the lower end of what we should be able to get. We usually invest 10% of the total money that we will be investing into the deal, and then our investors will be investing with us the remaining 90%.
To touch on the leasing, we have found an incredible amount of permitted uses for 3500 Loop Road, and we're very excited to start our leasing campaign. If you look below, there is a very wide range of tenants that we're able to attract. And what we like about this property is, given our amount of parking, we are able to accommodate really almost any need. We're very excited, especially for home services. That would include plumbers, electricians, restoration companies, interior design. For food and beverage, that would include catering, food prep. We could have food truck storage. Education would allow daycares, public, private schools, trade schools, colleges. Vehicle rentals is a very unique zoning that we are allowed to have. Lawn and garden, but overall, there is just a very broad amount of different tenant uses that we could have at this facility, and we're very excited for that.
And it is still in the bones of the building are industrial. What we are excited about in many of our other projects, when we had people from these industries approach us, for example, we had a hard time accommodating them with their parking needs. If somebody had maybe a little bit of a heavier office use, 10, 15, 20 employees in their warehouse, we could not accommodate them because we didn't have that much parking. Industrial buildings usually have very little parking. Because here we're creating an industrial building inside a former call center. We have 600 parking spaces that are it's just a luxury. We never had that before.
It is something we're excited to work with. Something like food and beverage, we could have a commissary for food trucks, charge them a market rent. We could draw additional rent from the storage of the vehicles. This just allows a lot of uses that we've had to turn away at our other properties. So the ability to have a large parking lot, the property itself is 7 acres. We're very excited. I hope this slide isn't too technical for you guys. We thought it was a good way to really show what is going on in terms of the supply and the demand in a 5-mile radius from our property. Overall vacancy is about 3.6, and that's considering flex, industrial, and office properties. For you guys listening at home, our property on CoStar is coded as office. So there's a couple interesting things, but when we look, and I'll go through what I've starred. First thing I've starred, it might be a number that would give you pause when you see negative absorption about 44,000 square feet. When you factor in about 62,000 or 66, what CoStar lists for the property, they would have actually had a positive absorption in a 5-mile radius. For this quarter and for the previous quarter, there's been a 0% vacancy for flex property.
Maybe you can explain what's CoStar and what's absorption very simply.
Thank you, Michael. Absorption is overall takedown of space. If an 8,000 square foot tenant leaves, but a 10,000 square foot tenant signs, there would be a 2,000 square foot positive absorption. So when TSIS left this building, there was a negative 62,000 square foot absorption for the market that is reflected in this 12-month number. So if you take our building out of the equation, there's been an overall absorption of 20,000 square feet in the market. Hope that helped, Michael. When you look at flex, and many of our users or potential users would be considering flex properties, there is nothing in the market. In speaking with agents, they have a tremendous amount of tours. One told me they had something come available in 1 week. They had 5 tours and leased it quickly. But we continue to hear good things in the market, and we see it on our own. Looking at industrial, the story is very similar in terms of vacancy rate. 1.6% is effectively zero. And when you look at office, and we've starred that, there might be some concern seeing close to a 9% office vacancy rate. But then you have to consider that our building accounts for about 60,000 feet of that vacancy, and that's about 4% of the market. So the actual office vacancy is sub 5% when you don't consider this building. Market cap rates well below our pro forma of 10. So you guys can imagine where this cap rate could be once we have this building occupied with good tenants that fit the profile of the building. And that is our presentation for tonight. Michael and I appreciate you joining us. Thank you for your interest. And we'd like to open up the floor to any questions or comments on McDonough.
Jason, can you talk a little bit about the higher asking rent that you're looking at? You've got 3 different categories that vary widely.
Yes. So in factoring this, industrial tends to have the lowest rents because the facilities are so large. If Coca-Cola is renting 1 million square feet, they would not be paying the 10.25 that we're asking. When you look at office, there is a higher finish to those offices. They typically rent for more in most markets. And a large number of office rents are going to be full service gross. So that would factor in some of the utilities into that number. What I will pull up is our lease comparables. And this is what we're seeing in the market for spaces that we have found to be very similar to ours. We're going to find a range of rents, really about $8.50 on the low end. The highest we've seen is about $14. Most of these landlords are passing the expenses on to their tenants. So we did set what we feel is a pretty conservative rent estimate at 1025. And if we're able to offer some of the best space in the market, we should be able to command a higher rent over time.
Are these all industrial examples on the comps?
I'm sorry, I missed the first part of that question.
Are these all lease comparables or industrial?
These are industrial flex comps. Typically, most of these comps have roll-up doors, about 10 or 20% office space, and 80 to 90% flex space.
Okay.
Are there any other questions?
Yes, I have a question.
Hi.
Hi,
Who is that?
Lavina.
Hi, Lavina.
I see that the disposition fee is 1.5%. Is that common?
Yes, let me take this. So we do have two types of fees that we are charging as the sponsor team here, and that is an acquisition fee of 2%, as well as a disposition fee at the sale. That is very common in the industry. So yes to that question.
Oh, okay. Because I think the previous project was like 0.5, and I was like, oh, this is like 3 times more than the previous.
Yeah, the reason is this project is significant. We happen to have a big project on the last one, and that's why we usually try to reduce the percentage if the project becomes larger.
Okay, thank you.
Of course.
Thank you for the explanation.
I guess that is it. Well, thank you everyone for joining us tonight. We appreciate your questions. If there's anything offline that you would like to discuss or dive further into, Michael and I are readily available. Thank you again and have a great night.
Thank you.